All right. Good evening, everybody. Hopefully you can all see us and hear us. Let me just move my screen around for you. There we go. All right. Good evening or good morning, depending on whereabouts in the world you are. If you don't know me, my name is Lindsey Stewart. I'm from Star Dynamic Property Investments. We're based here in Australia. What we have with us tonight is a couple of very special guests. We have Yair Benamini, who's the CEO of Lendai, and we have Mikhail, who's the head of the Toronto office and the in charge of customer success for Lendai as well. And what we want to do is talk through today about working with lenders, how to fund your US property investments, and how to use private equity to assist you in investing in the US. So what I'll do is I'll go through some slides. Please, if you have any questions, you should see a questions tab on your right-hand side of your screen there. Please, by all means, throw your questions into there. We'll answer them as much as we can as we go, but there will also be a Q&A session at the end so that we can make sure that we get everything covered and that we go through them all at the end. Make sure if you've got your phones on silent so that you can catch all the information, unless, of course, you're listening to us on your phone, then you will need to have the sound on. But other than that, we'll cover through a lot of information here tonight. Don't panic if you don't catch it all. We are going to record this session. So we are going to send out a recording for you so you'll be able to catch it up and go back through it again. And if there's anything that you missed, you can catch it up afterwards. All right. So don't panic too much. Do make sure, though, as you say, if you have any questions, please reach out. Put the questions into the questions tab there. If you have any information or you just want to say hi, let me know you can hear us. You can throw that into the chat tab there, and we're good to go. So without any further ado, let's kick off. So what we're going to cover today, again, as I said, we're going to go through quite a bit of information here. I'll move the slides up to the front so that you can see those instead of my face. There we go. All right, perfect. All right, so hopefully you can see our slides there. Let us know if you have any problems with the sound or if you're having any troubles with the screen. What we're going to cover today is four main topics. First, we're going to cover loans versus using your own cash and the pros and cons of doing that. Again, if you're welcome to take any notes or write anything down, we do have the Q&A session coming up at the end, so we'll cover off everything we can. We're going to look at loan options, what options we have as foreign investors in the US market, particularly as Aussies or Kiwis. I'll touch very quickly on how to open bank accounts in the US. Then Yair's going to come in and he's going to go through the US market and the mortgage market and how that works and what Lendai can do. And then what I'll do is I'll come back at the end and we'll pull all that together and I'll go through some strategies that we can use with lending and how this can all be implemented for you. All right. I guess we have to have the usual disclaimer. We are certainly not financial planners, so we strongly urge you to discuss all of your investment opportunities with your accountant or your financial advisor first. Ensure to make sure that you are in a position to invest and you are completely aware of the implications of global investing and, of course, any taxation or asset protection strategies that are needed. I certainly like to keep my accountant and financial advisors real close. So I would certainly recommend you do the same. All right, so let's move on. So tonight, speakers, you've got me, Lindsey Stewart. I'm the founder and CEO, as I mentioned, of Star Dynamic Property Investments. We're based here in Australia. I'll go through that in a minute. Yair is on as well. Yeah, I think you're based in the US, or are you in Canada?
No, I'm based in our Miami office. So Michal is in our Toronto office. I'm here in Miami. And the majority of the group is still is in our R&D center is in Tel Aviv. So we have a few different offices.
Fantastic. All right. Yeah, I started personally. I started investing in the US around about 10 years ago now, actually. While Australia felt relatively safe for me, I did see the attraction of the high cash flow properties in the US, the low entry costs. It was fairly hard to ignore. Since then, we've gone on to purchase and renovate over 50 properties a year. and we operate now in 4 states within the US, soon to be 5. So we do quite a few. We also now have our own multi-million-dollar construction company in the US as well. I must admit, when I first started, getting any form of funding in the US was very difficult. Back in 2012, 2013, 2014, there was no lenders that really would talk to us at all. It was really only the last couple of years that we've seen the lenders coming through and be a lot more open to foreign investment, and then to be able to find a company like Lendai who work exclusively with foreign investors is a real breath of fresh air. So I certainly couldn't keep it a secret, and thought we better tell everybody how this works. So yeah, did you want to give us a bit of background on yourself?
Yeah, so first of all, good evening. It's here it's very early on. It's 4 a.m. here in Miami, or in Toronto, where Michal is. So I'm Lendai CEO and one of the co-founders of the company. I'm a lawyer by profession originally. I said nobody's perfect, or I'm a recovering lawyer, as they say. And I've been working with real estate from the legal side of it and from the investment side of it in the last decade, in Israel, in Europe, and in the US. When we started Lendai 2019 is when I decided to move from being on the sidelines and helping others to invest and helping others to finance the properties in a different way, not just from the legal side, but from the financing side as well. And we'll talk a bit more about Lendai in a few slides, of course.
Great. That's great. And Michal, do you want to just introduce yourself quickly and just give us a little bit of background on yourself?
Yeah, sure. So good morning and good evening, everybody. And Lindsey, thank you for having us. I'm Michal Leviatan. I'm the head of the Toronto office, dealing with partners and customer success. In most of my mature life, I was self-employed, having businesses in a different world and industry. I brought my skills of customer success, customer service is most of my life, and I got hooked to real estate and financing and lending. I think we are delivering a solution that's very much needed around the world.
Absolutely, no doubt about that. I won't argue with you there, that's for sure. All right, great. So, I mean, for the companies, essentially for Star Dynamic, we essentially specialize in helping Aussie and Kiwi investors get into the US property market. I've been doing this since 2012, late 2012, early 2013. For myself, in 2016, I had some work colleagues of mine actually reach out, wanted some help to get into the US markets. They saw what we were doing, so wanted to get involved in the market and didn't know how to start. So we helped them get into the market, get a couple of good properties, and then all of a sudden I had dozens of referrals coming to us for other people who wanted help to get into the US market. So at that point, that's when I developed Star Dynamic Property Investments, which our goal is to help as many Aussie and Kiwi investors as we can get into the high cash flow market as safe as possible.
So a few words about us. So Lendai is
basically... So yeah, if you want to give a bit of background on Lendai.
Yeah. Can you hear me?
Yeah.
So Lendai is a fintech company and a direct lender. We're basically an R&D company based in Israel and a private lender based in the US with offices in Toronto, London, Israel, and the US. And all we focus on is financing foreign investors who invest in US residential market. We basically understood a few years ago in 2019 when we started that you can be a great customer in your origin country. You can be someone that has a lot of money, a lot of assets, but once you go over the border or over the ocean to the US and you want to invest over there, when you go to a bank, nobody speaks with you because you have no credit scoring, you have no SSN, nobody knows who you are as far as anti-money laundering goes. So when you go to a bank that you even work with this branch in your origin country, nobody speaks with you in the US. So in order to solve this problem, we built a technology system that allows us to basically overcome the information gap. So we know how to look on the properties in the US, understand how much they're worth, what's the cash flow coming from them, but also look on the investors from their origin country. So we know how to underwrite Canadian in Canada, an Australian in Australia, or Israeli in Israel. the system connects all the dots and allows us to give what we call a point of sale mortgage. So within a process that takes 3 to 5 minutes, you can sit at the comfort of your home in Sydney and get a full loan offer on a property in Georgia or Michigan or Florida. So you know exactly how much money you can take. And the process from application to processing and closing is all being made within our own system. So everything is fully online. You can do the entire process from the comfort of your own home. And once we finalize the underwriting, we are the ones that actually financing those loans. So we're not just a broker or working with someone else. We have our own money. We're a VC backed and backed by banks from Israel, from Europe, and the US. So we have our own money to lend, so we can decide very fast, use our technology to our own advantage, and help our borrowers basically expand their reach into the US market and be competitive there.
Fantastic. Yeah, absolutely. That's fantastic. How long ago did you start the company?
So the company started in 2019, and we've been working since then. We'll talk about it when we talk about interest rate, but we saw the mortgages that we did pre-COVID, during COVID, and now almost post-COVID, and we saw the market in both sides of it, and it's very interesting changes have been made through the time.
I can imagine. Absolutely. All right. Thank you. That's fantastic. Excellent. All right. So let's get started. What I want to talk about quickly is getting loans versus using your own cash. There is the old age questions of whether you should use all your own money or whether you should use other people's money to invest. There is certainly some advantages and disadvantages of each. So let's just have a quick look at those. I mean, when looking to invest in the US market, one of the most attractive benefits of it is its affordability, particularly when compared to our Australian or New Zealand markets. Often properties can be bought in the US for less than a deposit than what we're seeing here in our home countries here. Historically, though, for foreign investors, it was predominantly a cash-only market. I operated, as I said, for the first 5 or 6 years as cash only, and really have only been able to start accessing funds properly in the last sort of few years. Now, there's many more options opening up for foreign investors to access funds now, and while conventional methods in the US are still generally out of reach for non-residents or foreign investors, particularly early in their investing stages, there are certainly now private equity options available that can be extremely competitive. Within the US lending market, private equity can make up for a very large percentage of all loans drawn, unlike here in Australia, where private equity lending is a very, very tiny percentage. And in 2021, it was worth over $1.2 trillion alone. So private equity lending is a massive slice of the US equity market, whereas here in Australia, and I'm not entirely certain about New Zealand, but I think we're a very, very small percentage. So that's where there's a lot of difference that we see between the two markets. Pros and cons, generally you will find, if you're using your own money, there can be a little bit less risk involved. You don't have that lender tapping you on the shoulder or an additional person involved in the transaction trying to make sure that it's profitable. There's no additional cost of interest, of course, if you're using your own funds, and you can often sometimes see a little faster turnaround times in settlements. If you don't have a lender, we can generally close on properties within about, sort of 10 to 14 days. When lenders are involved, it can sometimes blow out to sort of 30 to 45 days, depending on the lender, of course. So that's just something to take into account. The cons of using your own money, though, is it certainly means that you need more money and more capital to invest. You will often get a lower return on your investment, or specifically a lower cash-on-cash return on your investment, and you don't get leveraged growth. So if you are using borrowed funds and the property increases in value, then what happens is you are getting leveraged growth, not only on the cash input that you've got, but also the leveraged funds that you have into the deal. It also means you've only got a capacity to buy a few properties each year because you've got your own capital. Whereas if you are using lending, it will open up a larger percentage. You could certainly look at buying more properties within a shorter period of time. So a solution here is, of course, what we call in Australia OPM. Let's use other people's money. So by using private equity funds, this certainly can enable us to leverage more into properties. As investors now, we can access a broad range of private equity options, particularly through companies like Lendai, which can help us to leverage our investments, increase our returns, and basically fast track our goals. So let me just run through quickly a number of ways of what funding options are available. and I'll show you the different ways you can do it. So first up, I guess point A, in the top left-hand box, you certainly could use equity from properties that you already own. Now, that could be properties that you own here in Australia, or it could be properties you own in New Zealand. Generally, the best interest rate you're going to get in terms of rates and terms will be using a local bank here in Australia, but it's going to be difficult sometimes to get those local banks to support foreign investment. Maybe a line of credit loans can work, but they're going to be higher interest rates. And you may also have to be required to have it requires you to have properties that do have equity into them that you can access. On the right-hand side there, you can certainly borrow money from friends and families, or you could do joint ventures with friends, colleagues. But this can certainly be tricky, and there has, many a falling out has occurred within friendships or family because of poor documentation and not everybody being on the same page. A third option, bottom left-hand corner there, is what we call land contracts. Now, in the US, here in Australia or New Zealand, we would call this vendor financing. In the US, essentially what this is that the seller is financing a percentage of the deal for you. These deals can certainly be harder to find, though. They can be quite expensive and are generally only short-term options. Rates can be as high as 10% or even greater, and the purchase price on properties through land contracts can generally be inflated. Lastly, and probably one of the best options, is using US-based private equity lenders. Now, we say this is one of the best options. These lenders are generally very, very easy to work with. They're generally they're what we would call low doc loans. There's not a lot of documentation required. There's not your own credit rating, your own income, etc. is not necessarily taken into account when you're doing this. Lenders are generally very competitive these days with very flexible terms and can make buying property in the US very easy. So without further ado, let me hand over to Yair. He's going to talk you through the private equity market and the mortgage market in there. And what I'll do is I'll just stop the screen sharing, Yair, and the screen, there we go, the stage is yours.
Oh, sorry, I was on mute, I think. Can you hear me now?
Oh, we can. Yep. Sorry. Yep.
Yeah. Okay. Sorry. Yeah. So I just explained that I will talk now. We'll start by explaining a few things about the U.S. residential market in general, because when you're looking on U.S. mortgage market, you first of all need to start from understanding the U.S. market in general, and then we'll do a deeper dive into the mortgage market today and why to finance, some tips on how to find the right lender, how to be prepared for the financing of your properties, etc. So we're Lendai, and that's, you already know, so we can jump right ahead. So basically, when the best thing in the US is that you have a lot of data. If you know where to look, you can find pretty much any data points that you want. And this is actually something that we're using as a fintech company quite often, build algorithms based on actual data from the market. So the first thing that I want to talk about is what happened in the US market as far as prices in the last 30 years. So what you can see here on this graph is from the US government, of course, officials. It's the median and the average, house price in the US from the 90s until today. So you can, of course, see that the price is going up from the 90s, which it was $160,000 for an average house in the US, which is, of course, crazy. And then it went up. And of course, everybody know 2006, 7, and 8, when the subprime market the bubble was explode, the market went down. Actually, when we're looking at it on a 30-year duration, we're seeing that even though people thought that the world is ending, in general average of the entire US, 350 countries, 3,200 counties, it wasn't just such a big fall in the market. It was more of a dent in the market. And since 2012, we're seeing a constant rise in real estate prices. And specifically, if we're looking on 2020 and onwards, basically when COVID starts, we can see a very strong upwards motion within the prices. And that is happening for a few reasons. And understanding those reasons will it will help you understand basically how to leverage this knowledge and to use the market to your advantage. So the first reason is actually an historical reason. If you're looking in 2006-7 and the crisis that starts there with the subprime, what happened that this created a credit crunch in the US market. After the crash, the banks stopped financing new construction projects in the US, all over the US. So until 2012, sometimes even until 2015, almost no one was building new properties in the US. But of course, the US economy kept growing. People are making kids getting older, they need to buy home. People are relocating into the US. So there are a lot of people are looking for homes, but nobody was building homes for 6-7 years. So the inventory in the market was very low. And of course, we all know 101 of economics is supply and demand. So the supply was scarce. Even now, after the last 2 years, the supply start to build up again. As we speak today, there's still 6 million single-family properties missing in the market. 6 million properties over the US, which is of course a lot. So there's very small inventory in the market. Every new home that is out there in the market, there are multiple buyers to buy it, and that pushes the prices, of course, up. But what happened, and that was the case, of course, from 2012 and onwards. But what happened in 2020 is what really changed the market dramatically. So a few things happened when COVID started in the US. And it happens all over the world, but in the US, it has a bigger effect. The first thing is that people moved from city centers into the suburbs. The US, we're talking about a huge country, but eventually the majority of the people are living in the city centers, in New York, in LA, San Francisco, etc. Once COVID started, people understand, well, the city is closed. I'm paying a lot of money just to live in New York, but there's nothing to do in New York because everything is closed. So there was a flock of people moving into the suburbs, buying those single-family rental properties in the market. And again, we said we still have a low supply, but the demand went up higher because people that start working remotely said, well, I'm working from home. So why work from a 2-bedroom apartment in New York if I can work from a 5-bedroom home in Florida and I have a pool in my backyard? So that created a very big influx of buying properties outside of the city centers, and this took the prices way up. On top of that, and also something that happened in a lot of places, but specifically in the US market, even in a stronger way, the US government and the federal government basically poured money onto the people. I can tell you that I was in Israel that day. My kids are Americans, and I'm opening my mail, and I got a check from the US government, and a big check, I have to say. Why? Because my kids are American, and the US government decided to give money to all Americans, not even if they live in the US. So suddenly people are getting money from the government, and I had a job, everything was fine with me, but suddenly I have another extra few thousands of dollars that I need to spend. And if I was living in the US, it was even more than that. So I have more money to spend. But on the other hand, everything is closed. I can't go to the cinema. I can't go to vacations. So I have more money to spend. I don't have what to spend it on. What do I do with it? I'm searching for ways to put it and start making some good investments. So more money came into the market, and people had more available money to invest in real estate, because the real estate is the safest place to put your money, specifically in a crisis. And on top of all of that, and we will talk about in the next slide, the interest rate went to the all-time low in the US history. And you can see it over here in this slide. So basically taking other people's money, as Lindsey said, was the cheapest it was ever been. So there's no inventory in the market. More people want to buy in homes because they need to move outside of the city. They have more money from their own pockets to buy those homes. And taking other people's money is very cheap, as it's a fraction of what it was pre-COVID. So I take more money from other people. So all those reasons create a very huge demand with a limited supply, and that picked the prices to where they are today. And it's very, a lot of people are saying maybe it's a bubble. It happens before in 2008. So that's just one thing that I want to emphasize. Maybe in some markets there is slightly a bubble, but it's very different from what was in 2008. Because if I'm here in South Florida, so in South Florida now, you can find a property to buy, and it's not because people are buying speculations and say, okay, I want to buy investment property in Florida. People are actually moving from New York, from California to Florida, So they're paying, instead of $500,000, they're paying $1 million on a property, but they're actually living there. So if you want to rent a property here in South Florida, if you want to buy a property, you simply can't, because there's so many people flocking in. So it's a real demand in the market. It's not just people that are getting mortgages without having no income or stuff like that, what it used to be with the subprime. So it's a very different atmosphere in the market. So that's just to give you a general overview on the U.S. residential market and what we see today in the market. And again, we need to remember that the U.S. is a big country. As we said, 50 states, 3,200 different counties. So even though the prices went up all over the state, there are still a lot of places and investment pockets, as we say, that you can still find very affordable properties, mainly if you go to Michigan, Ohio, and those markets. So you don't have to buy downtown Miami because it's too expensive. You still have the entire U.S. to invest. The other side, and that's touching the point that we talked before, so it's the mortgage rates. So I can give you an example from our rates pre-COVID. We used to give mortgages for foreign national. We were amongst the only company that doing those in an ordinary way. We gave loans in 7% interest rate, and people were saying thank you, because that was a very low mortgage rate pre-COVID. If you're looking in the 30 years back until the 90s, people were paying in the US 10, 12% mortgage rate. That's Americans paying on their own property that they live in. Today, Americans paying 3% and foreign nationals paying 4 to 5%. That's a whole different ballgame. That allows us to make much more money on our money, because, as we said, other people's money, mortgages in this case, are much cheaper than ever before. And of course, we all know the reason for that. Part of what people thought would be a crisis in the market during COVID, the U.S. government lowered the interest rate, and that's pushed everything down. And it's important to say that if we're looking now, these days, the interest rates are starting to rise up again. Because of inflation rates, the money starts to be more expensive. And we saw in the last 2 months or so an increase in the U.S. interest rate. And we're talking, the Federal Reserve and the U.S. government are talking about increasing this interest rate every 3 to 4 months now during the next year or two. Maybe the war in Europe now will change a bit those decisions. We'll see where the market will go. But we won't see in the near future those crazy low prices as they were. But we are still very close to our all-time low in the market. And having this high view on the market, I want to take it and give you some tools to understand how to use it to your own advantage and to get some good calculations into what to do with your money. So what you see in this graph is actually, I took the two graphs that we saw before. The blue line, of course, is the property prices. The green line is the mortgage interest rates. And once you put them together, you can really understand what happened in the market. So you can see that in the 90s, the property was very cheap, but taking someone's money was very, very expensive. So it doesn't always make sense. Around the beginning of the 2000s, it was almost the same. And if we're looking in 2020 and of course 2021, it was shifted all the way. It's like a clock that was reversed, and the delta between the today interest rate and the property values is at the highest rate and the highest delta that was ever been. And what the advantage that we can see here. So basically, if you were like Lindsey, you were smart or lucky to invest in the US market in the last decade, it means that the property that you bought has now gained a lot of value. Let's say you bought a property in Georgia in $200,000 4 or 5 years ago. Now this property is worth $400,000, sometimes even $500,000 or $600,000 today. So you have much more equity invested into your property when you didn't do anything. You just bought it in a good period. It's like they say, don't wait to buy real estate, buy real estate and wait. So now you can see exactly what happens if you waited long enough. But the other side of it is interest rates are low. It means that the delta between them allows you to extract maximum amount of money out of your property. Sometimes all the cash that you put in the property, and sometimes even more than that, and it will cost you the least, or almost all-time least. So it's a very strong opportunity And what you see here on this graph, this is what many Americans understood in the market. So if we're looking on the US mortgage market in 2019, there were $2 trillion, sorry, of mortgages in the market. If we're looking on 2021, $3.9 trillion of mortgages were issued in 2021. Why? Because people understood what I show you in this graph, that that's the best time to extract and refinance their properties and replace expensive loans that they had in the past in cheap loans, or if they had equity stuck between the walls, to extract it to reinvest in the market. And one thing that I don't know in Australia, I don't think you have this product, and you need to understand about the US market, that the US average mortgage is what they call a 30-year fixed rate mortgage. It means that the rate that you lock on the day of closing of your loan, that will be the same rate for the entire duration of the loan. So if you lock a rate of 4%, 5% now, 29 years from now, you will still be paying the same amount of money for this loan. It doesn't matter what will happen in the market. So all-time low interest rate prices, that's the best time to catch those rates and lock them for the next 30 years.
Absolutely.
A few words about the available loan programs in the US and with Lendai specifically. So of course, before we start on getting a loan, and a lot of clients, when you come specifically to the US crazy market as of today, you'll go to a broker, you'll go to a company and say, okay, I want to buy property in the US. So the first thing that they will ask you, if they're a real estate broker in the US, they will say, okay, are you pre-approved by a lender? Because if you don't have an approval that shows that somebody can finance your property, your offer is less competitive. Unless you can show me that you have all the money in cash, of course, in your bank account here in the US ready to fund. So the first thing that we have in the system is a very short and simple pre-approval process where you can actually know exactly how much money you can get from Lendai and get pre-approved even before you found the property that you want to buy, with an online process that to get a pre-qualification takes 2 to 3 minutes, and fully pre-approved, just we need a few documents that you need to upload, and you get pre-approved in a few hours. So with the same day or the next day, you can have a pre-approval letter from a lender, and this is actually showing you how much buying power you have. And when you're putting an offer on a US property, specifically in such a seller's market as it today, they want to see that you're pre-approved. They want to see that you're actually worth what they offer you. You said you have $200,000 or $300,000 to invest. If a lender already pre-approved you, it means that you're in business. You have the money, you're ready to roll, and you can do a fast transaction. The first product, it's the most simple one. It's a new purchase loan. Basically, we're enabling foreign investors to buy real estate properties in the US with financing. So instead of bringing 100% of the transaction, you can bring only 30% down payment, and we can cover up to 70% of the rest of the transaction. Cash out refinance or regular refinance, that's basically what actually now it's 85% of our business in the last years. People, and specifically foreign investors, that bought properties in all cash in the last decade or so. And as we said, there's a lot of equity stuck between the walls. So we're putting a mortgage on the property and extracting, again, up to 70% of the current value of the property. So if you bought a property in $100,000 and you put $100,000 from your own cash, and now this property worth 150, even more than that, we extract 70%. We can extract all the capital that you put in the money, in the property, and even more than that. And a portfolio finance is basically the same type of product, purchase or refinance, but for a portfolio of loans. A lot of our borrowers are high net individuals. They're buying not just one or two property, they're buying 5, 6, 10 properties at a time, or they used to buy 2 properties every year, and now they have 10, 20 properties that they already own free and clear, and they want to cash out from this entire portfolio so they can get the money and reinvest in the market and buy more and more properties into their portfolio. The next thing that I want to talk, and this is where I will have some interesting clashes with Lindsey, is what are the benefits or leveraging your investments in the US with US financing specifically. So the first point is, of course, it's a very simple, it's doubling, and actually today it's even tripling your buying power. So if you have $100,000 in your pocket, if you get financing, you suddenly have another $200,000 to play with. So instead of buying one property in a C area, which is a low-income neighborhood, you can buy one property in a B or A neighborhood, so you have better tenants. Or you can buy 3 properties in a C area and diversify your investment. So you're doubling and even tripling your buying power. The next thing, and we will touch on a specific example for that, and as Lindsey said before, you can actually get a higher cash-on-cash return once you use other people's money. And I will, of course, touch it with a specific example in a few slides. The third thing is, and this is where the first clash with what Lindsey said, is diversifying and lowering your risk. What do you mean? So it is correct that a lender puts a lien on your property. So there is someone who is in front of you on your property. And as long as you're paying the money for your investment, so let's say you're taking a $100,000 loan, the monthly payment is around $500 a month. As long as you will pay those $500 a month, nothing will happen. But of course, if you won't pay your mortgage payment, the lender can take your property. But what does it give you? Basically, if you said you had $100, and again, we need to update this slide because today we give 70%. So you can put your money, instead of in one property that worth $100,000, you can buy 3 properties, each one of them in $100,000. So you have only 30% down payment. You have $30,000 in each one of them. So if something happened with one of your investments, let's say the tenant is not paying, let's say a hurricane came by and took the house away, you still have other properties that are still cash flowing, still keeping your equity alive and kicking. So it's right, somebody else has a mortgage on your property, but you actually diversifying and tripling your buying power, so your risk is actually lower. On top of that, and that is very, very relevant specifically for foreign investors, but for any investor, that when you're working with the right US lender, you're actually getting a due diligence on the deal by an expert to make sure that your investment really works. Because when we're looking on a transaction that you want to buy or a property that you bought before, we want to first make sure that this property and this investment is a good investment that can repay the loan payments. So we're checking the appraised value, and we're checking the condition, and we're checking the legal status of the property. We spend millions of dollars building algorithms to evaluate a specific transaction. So once you're using our money and you're getting a loan from Lendai, for example, you're getting our efforts, you're getting our underwriting team, which is professionals that have 30 and 40 years of experience doing underwriting on real estate investments in the US. And we're helping you actually evaluate the properties. And I can tell you horror stories on things that we found along the years from people. I always like to use this example. A good investor, an investor that has 10 properties in Georgia, and we did a portfolio loan on 5 of his properties. He wanted to cash out of 5 of the properties, and he lives, of course, abroad. In this case, I think it is in Israel, this specific borrower. And once we send our guys into the property to see, basically we send the appraisal to see the properties and give us an appraisal report. In one of the reports, we saw the following wording. It says there was a picture of the kitchen, and it says the kitchen floor is sinking into the basement, but I couldn't get into the basement because it was so filled with mold that it was unsafe for me to get there. And this was a property that was rented. I don't know how, but there's a tenant in it paying $1,000 a month for 2 years now. And the owner, who lives in Israel, had no idea that there's such a problem in the property. So it's right, today it looks like everything is okay, but if tomorrow this tenant will stop paying or will get out of the property, he's expecting $20,000, $30,000 of investment just to rebuild the kitchen, rebuild the basement, etc. And we found out about it. Of course, we couldn't finance this property. What we did actually in this case, we gave him a loan on his other properties. He used the funds from the loan on the other properties to basically rebuild this property, and then we refinanced this property as well. So we found out the problem. In other cases, we saw problems in the title, in the legal side of the property. We saw properties that people didn't know that they have a lien on because they forgot to pay taxes. People didn't know that their insurance policy is not covering them because they thought that they're doing a great insurance policy, but they forgot to pay last year. So they don't have any coverage for a year now. And we saw all kinds of cases that once we see them, and this is the way that we work, we're not telling, okay, there's a problem, we won't finance you at all. We say, okay, there's a problem, let's see how we can help you fix the problem so we can finance your property. For example, we just did now, we're doing a loan for one of our Canadian borrowers, and his US entity that he bought the property through this entity, he didn't register it it was in Michigan, I think, this property, and he had to register it in the US. So we found out about it, and he was, that was problematic for him. So we reached to his lawyer, explained, hey, you need to do X, Y, Z. The lawyer fixed whatever needs to be fixed, and we can finance the property. So we try to help you understand what you need to fix in order for us to be able to finance. And we're actually helping you be a better investor because we help you to safeguard your investments in the US. Sorry. The next thing is, again, that's a controversy. It's not controversy, but it's another point of view to what Lindsey said. So Lindsey, again, is correct. When you get a mortgage, you need to pay interest rate, and then somebody else gets some money out of the cash flow. But what's the big advantage in the US? That all the costs around the loan, from the appraisal, from the fees of the lender, from the taxes you're paying around the loan, and of course the monthly payment and interest of interest and principal are all tax deductibles. So even though you're thinking that you're paying, 5% interest rate, you're not actually paying 5% interest rate. Because if you construct your tax reports correctly, you can almost pay no tax at all. And that's not a recommendation, but I do recommend to use tax advisors when you invest in the US, and specifically with real estate, because you can save a lot of money just with working right with the US tax system around real estate. And all the loan costs are tax deductibles. So in many cases, it actually saves you money and help you pay less taxes. So it's not actually what you see on the monthly payment that you're actually paying. On top of that, and that's a huge deal for a lot of investors, and this is specifically for refinance. So again, let's take the example we talked before. You bought a property in $200,000 in Atlanta, Georgia, for example, and now this property worth $300,000 or $400,000. So on the paper, you say, okay, I made a lot of money. I am now the full owner of a $400,000 home, and I just invested $200,000. But you can't see this money actually in your bank account, because in order to see this money, you need to sell the property. And then two things will happen. First of all, you're losing a good property. That's a cash flowing property that brings you cash every month. And the second of all, once you sell a property, that's a tax event, which means that you need to pay capital gain tax to the US government. And again, nobody likes to pay taxes. So what you're doing with a cash out refinance loan is actually, you're not selling the property. You're keeping the property. You're still getting a positive cash flow from the property, but you can extract 70% of the property value. So in the example that we did, you bought in $200,000 and now it's worth $300,000 or $400,000. Now you can get all your equity out, but you're not paying even $1 on that, the taxes. So you can reinvest it in the market and basically postpone any tax event until the day you will decide to sell it. So you can keep on building your portfolio with paying very minimal taxes, if any, in the US. And that's a very, very strong tool. And I'm sure Lindsey will talk about the BAR strategy as part of this. Another thing that is specifically very relevant in the market today, and is specifically for the US market. So as we said before, the product that we give, and that's a very unique product in the US, is a 30-year fixed mortgage rate, which means that the monthly payment that you're paying today on your loan, let's say $500 on each dollar that you took today, will be the same for the next 30 years. But because inflation is going very strong in the market, and it will always keep on going, not necessarily as high as today, you're actually protected against inflation. Because once the inflation keep on rising, so your property value goes up, the rent that your tenants are paying goes up, everything goes up. There is only one thing that stucks, and it's the mortgage payment. Because we said you're paying $500 today for every $100,000. You will keep on paying $500 every month for the next 30 years. But you're making more money out of your property. The property itself worth more money. So it's actually a good protection against inflation because the monthly payment are actually realistically getting smaller and smaller as all other prices keep on rising because of inflation. And the last thing, and again, I want to relate to something that Lindsey says, and we see it all over the world. Canadian used to do that as well, Israelis and others, Brits, using capital from your own country, and I'll give an example on that, is actually exposing you to a lot of currency exchange risk because you're taking money out of your home in Australia, in Australian dollars, but you're buying a property in US dollars and you're getting the investment back in US dollars, which means that if there's changes on the exchange rate between the US dollars and the Australian dollars, you're exposed to those changes. And sometimes it can really hurt your investment in many ways. You can sometimes benefit from that, of course, but that's something that is so not predictable. So you want to, as investors, you want to minimize the unpredictability of your business. So minimizing the currency risk is a big thing. And two things that I want to give examples for. So that's just to see what we talked about now. So let's say we're looking on a $400,000 US home. You can buy it with cash, of course, and you can buy it with $400,000, or you can buy it with, and you need to bring everything from home. So if we're looking on today's exchange rate, it's around slightly more than $500,000 of Australian dollars. But if you're using financing, you need to put a down payment of $120,000, which means only 166 Australian dollars, which means that you just saved the exchange rate cost and you save the exchange rate risk on 70% of the investment. So you can bring much less money into the transaction from home, of course, 166,000 Australian dollars instead of $500,000 and more, and you just decrease your risk. So this is actually the simple story of doubling or tripling your buying power with US investment. And the next example that I promised you is about the cash and cash return example. So what I'm doing here in these two slides, I'm taking a very simple, straightforward, with clean numbers example, just to show you the principles of how you can get a better return. But of course, the same numbers, it will work even if the numbers, the purchase price wasn't so clear and the interest rate was a bit different. But just for the sake of the simplicity of this slide, we're doing it with straight numbers. So we're looking on a US property of $100,000. The equity that we have, the cash in the bank, is $100,000. We have a potential loan of 50%, $50,000, and the interest rate for this potential loan is 5%, and it's interest only just to have the clean numbers in the example. And the NOI, the net operating income, the cash flow coming from the property after the expenses is $10,000 a year, which is a great investment property, of course, for $100,000. So let's see what happens with the two options of financing. If I'm buying it cash only, so I have $100,000 in my bank account, I pay to buy the property, and the property makes $10,000 NOI, which means that I'm doing 10% cash on cash return. But what happened when I finance this property? So the property price is still $100,000, but now I'm putting only 50% of the equity, and I get the other $50,000 from the lender. So of course, I need to pay for it. As Lindsey said, there's an interest cost. So 5% out of $50,000, $2,500 a year. That's the payment for the mortgage on a yearly rate. The NOI now is lower because the debt service, the cost of the mortgage, is deducting some of my money. But actually, when we're looking at the cash and cash return, so I'm only making $7,500, but it's against a $50,000 of equity that I put in the investment, which means that the cash and cash return just jumped from 10% to 15%. And that's basically the whole story. While using other people's money, and as long as the interest rate of the mortgage is lower than the basic NOI or the basic IRR of the investment, you will get a higher cash and cash return. And on top, of course, all the other things that we discussed before and the other advantage of leveraging your capital. But that's the entire thing on one slide. Any questions up until now that somebody want, Lindsey, any comments or something? I'm just running over it.
Yeah, no, I don't think we have any at the moment. So yeah, you're happy to keep going. That's really good information.
Yeah. The next thing that I want to talk is how to choose the right lender for you. And this is things that sometimes as foreign investors we don't know and we don't understand what's the importance of choosing the specific lender to work with in order to really build your portfolio in the US, because building a lender and building your investment team in the US is a very important thing. You need to have the boots on the ground with companies like Star Dynamics, with realtors, with property managers, and having the lender on your team is helping you to grow exponentially and to make sure that you're doing much more money on your investments, but you need to find the right lender. A few things and a few tips that I want to talk about here. So first of all, when you're talking to a lender and you're seeing your mortgage you're about to close, read the fine prints. And when I'm talking about predatory lenders, you need to understand that in the US, there are two types of lenders. One type is finance companies such as Lendai. We look to give you mortgages and get the mortgage payments back to us. That's our business. But there's another side of the story. It's called predatory lenders. Those are financing companies, but they're actually real estate companies. Their end game is to get a hold of your property and not your mortgage. So they will offer you sometimes deals that too good to be true, because they are too good to be true. They will tell you, I'll give you 85% LTV. I'll give you 90% LTV. But if you read the fine prints within those loan documents, you will see that if you will miss one payment or stuff like that, you will have very high penalties, etc. Because the real goal of those lenders is to get your real estate to them. So they will find a way to make sure that you will default so they can foreclose on your property. And then they gave you 85% of the property value. Now they own your property in 85% of its value. So they just did a great deal on transaction. Those type of lenders called predatory lenders. Today there are laws against them in many US states, but they are still out there. And make sure to read the fine prints and make sure that you're not working with a predatory lender on your loan. Another thing that is a good tip is never pay anything for the loan except the appraisal upfront. Pay the appraisal, it makes sense. The appraisal needs to go to your property and he needs to examine it before even the loan was issued. So he needs to get paid, and try to pay directly to the appraisal, not paying someone else that he will maybe or maybe not bring the money to the appraisal. I can give you an example. We had a borrower came into us with a loan. He went to a US lender and he asked him for $3,000 down payment to pay for all kinds of costs. He said it will be deducted off the loan amount once we close the loan. And a month went by, and another month went by, and there was a problem with the appraisal, and there was a problem with the documents, and nothing happened. So he wanted to move the loan to us because he knows that we can close in weeks and not in months. But the lender said, no, the funds that you already paid me, that's non-refundable. It's already my money. So he was stuck either going forward with a bad lender that he already spent $3,000 on, or losing this money and going to Lendai. So make sure that you're not paying anything except the appraisal fees up front. All the rest of the cost should be paid only at the closing of the loans. Once you get money, then the lender gets his money. And that's how it should work. And the last thing is make sure that you're working with a lender that has specific experience working with foreign nationals, that he knows how to work with foreign nationals, that you're not the first foreign investor that you work with. And I would say even more than that, find a lender that works with investors from your origin country. So find a lender that worked before with Australians, with Canadians, with Brits, because we're seeing, for example, I can give you an example on that. Australians love to buy their US properties through an Australian trust and then open an LLC in the US and then buying the property in the US under the trust and the LLC. But the majority of lenders in the US doesn't know how to underwrite a trust in Australia because they've never done that. So they will start the process, take your money, start working on the loan, and then they will find out that they don't know how to do the actually underwriting and the KYC, the know your customer process on an Australian trust. So the loan will get stuck or even canceled during the way because they didn't do this before. So they tried to jump too high and they couldn't reach it. So make sure that you're working with a lender that knows how to work with foreign investors, did it before. You see the reviews, you talk to friends, you talk to your realtors, and they said, yes, we worked with him in the past and he did a great job. And so that's what we're talking about, the documentation, the underwriting guidelines. See someone that knows your language. Of course, with English-speaking countries, it's easier, but with other lenders, we have offices all around the world to be able to speak with our borrowers in their origin country language. And of course, Ron is a very important thing. Ron is a remote online notary. So very few lenders knows how to work with Ron solutions in the US. With foreign nationals, we have, of course, a solution for that. It means that you don't need to get out of your home because we have an online notary that can help us close the loan, so you can actually sign on your loan documents from your computer in Australia. So you don't need to go to the US Embassy. You don't need to get a notary and apostille. Of course, Ron is allowed in 41 states in the US, so some states still don't allow Ron, but Michigan, Ohio, all those states, of course, allow that, Florida, etc. So those are just three tips on how to choose the right lender for you. Another few practical tips that I want to share is how you should prepare yourself for getting a loan in the US. So the first thing, and this is something that we always say to our borrowers, get your house in order. As you need to be organized and be ready for a financing project, because we as a lender needs to see all kinds of documentation. We need to see the purchase agreement of the property. We need to see if it's a new purchase. We need to see the lease agreement, your agreement with a management company. We need to see the incorporation docs of your US entity or your Australian trust. So make sure that you have a folder in your computer with all this information, your tax returns or whatever you need to have. As long as you be organized, uploading this is a click of a button, and this will save you a lot of time. If you don't have it, we will, of course, help you get it done, but it will take you more time. So if you have a time-sensitive transaction, make sure that you're fully aware of what you need to prepare in advance so you can get the application running in a matter of 30 minutes and not in a matter of a few days. The second thing is work like a pro, I call it, and have the necessary answers. When a lender is underwriting yourself, underwriting a borrower, we're looking for red flags. So one of the red flags that we're seeing specifically with foreign investors into US real estate is what is the source of the funds of that transaction. So let's say we're looking on your bank account in Australia or in the US for that matter, and we're seeing suddenly $500,000 coming in. So this raises a red flag. We will need to verify what's the source of those funds. So if it was an inheritance that you got, and you have the documentation to prove it, be prepared, because you will know that someone will raise the question of how do you get the funds to buy this property, because this is an anti-money laundering issue, which is a big issue with foreign investors in the US. So have the necessary answers in advance, have the documentation, know how to show what's the source of the funds of your deal. This will save you a lot of time of back and forth discussing with your lender. And the last thing is put extra effort on the legal side. And again, that's related to what I said before about the due diligence that we're doing on the investment property and yourself. We try to make sure that you're fully aligned and your business is working correctly in the US. So don't think that you can do everything by yourself. The US system is a very different system than the Australian one or the New Zealand one. And make sure that you have a lawyer or a professional helps you open the US entity. Make sure that the title of the property is clean, that you have an insurance policy that is valid on the property. And even if it costs you some dollars, it will be worth gold. Because otherwise you can have tax exposure, you can have lien exposure and others. Make sure that you put the extra effort on the legal side of doing business in the US. It's very organized. It's very easy to do that. You just need to have the right persons in your team to help you do that. And don't be afraid to spend a few dollars on working with professionals. It will save you a lot of money in the future. And we pretty much conclude on the tips and the market. A few things that I just want to emphasize on the process on how you can finance your investment properties in the US with Lendai. So basically, the process itself has 5 simple steps. It's always start with a partner referral. So partners are companies like Star Dynamics. We have hundreds of partners in the US, Canada, Europe, Australia, Singapore, and other places. The partners are having a link, and they have a landing page that Michal can share here in this chat, that they can connect your application to our system with a click of a button. Once you get the partner referral, you will get an email saying, hey, Star Dynamics just created a loan application for you. Start to process here. Then you need to answer a few questions about yourself, a few questions about the property that you want to buy or the property that you already own and want to cash out on. And you will get an instant pre-approval. Our algorithms will basically calculate your creditworthiness. They will calculate the property value, the property cash flow, and will give you a point of sale offer. So within a few minutes, you will get a specific offer on how much you can borrow from Lendai or how much you can buy, what's your buying power. The next phase is an online application. You will meet with one of our customer representatives, whether it's Michal from our Toronto office or from our London office or the Israeli office. When on the Zoom meeting, like we're doing something similar to now, we'll help you answer any questions that you have, help you upload all the necessary information and documentation that you need. Once we have all this information, we will order simultaneously the appraisal, the title, that's the legal side of examining the deal, and we'll do the underwriting. Once the underwriting is done, we will schedule a closing date and then do what we call an e-closing. As we said before, you will get on a Zoom meetings with us and with a US notary. We'll sign the loan documents and get the loan funded. So from application to closing with Lendai process, it takes between 10 to 30 days. So again, related to what Lindsey said, that buying with cash is faster than buying with finance. So that's the right answer in 99% of the cases. But the way that we build Lendai, and our goal is to help foreign investors to level the playing field and being able to buy with financing as fast and easy as they were buying all cash. And this is what our system enables us to do. And the total time the client spends during the process. So as we explained, to get the pre-approval is a matter of 3 to 5 minutes. The online application takes between 30 to 60 minutes to upload all the information, answer the questions. And then we process, we do the work on the back end. And once we have the e-closing meeting takes around 30 minutes more, and that's it. So it's actually faster to finance your property in the US with Lendai than getting a home line of credit on your properties in Australia. You don't need to get out of your home, drive to the bank, search for parking, and wait in line. You can do everything online in a fast and simple way. This is just, I'm not going to go too deep into that, but that's if we have any questions about interest rate, etc. So we have, our entire process is built on transparency. So you can see it on our website. You will see it within a few minutes once you start the application. You will see exactly how much you can borrow from us, what the requirements are, exactly where we work, and everything that is very, very transparent. You can see it on our website, of course, as I said, because we want to help you know exactly what you need to do. So we will be very transparent through the process in order to help you finance that. A few examples just of those are a few investment properties for Australians, and I think a few of them are Canadians, or maybe one of them is even a Brit, of just properties in the US that we did with a loan. So we did, for example, a portfolio loan of 2 properties for an Australian customer from Sydney, Australia. And the properties were worth around $400,000 together. We extract 70% actually. It was less than $400,000 the property value. The interest rate that he pays is 4.5%, and that's the interest rate that he will pay for the next 30 years, as we said. His IRR on those properties are around 12% today. It was around 9% before the loan. Now it's around 12%. The same we can do for single property. You don't have to have a portfolio of loans. The minimum property value is $100,000. So here we see a smaller property of slightly more than of around $200,000. They've got a property in Michigan again that we financed, and sometimes a purchase, of course. Again, this is an example for a property in Michigan for an Australian to be financed. So that's from my end, and the floor is yours again, Lindsey. I'll stop sharing my screen.
All right, fantastic. No, that was some great information there. Yeah, thank you very much for that. Yeah, so look, there's some great questions coming through there as well. Keep them coming. More than happy to hit those, and we can also got a Q&A session coming up at the end as well. So what I'd like to do now is while your questions are coming in, and Mikhail will hit those as much as she can, and I'll jump in while I can. Let's tie this all together. So how does this work for you as a foreign investor? So like Yair was mentioning, there are a couple of strategies that you can use lending for. Three of the ones, there's three specific strategies that we look at. And, you know, the first and the foremost, and probably one of the easiest, is what we would call the buy and hold strategy. And this is essentially where you are buying high cash flow rentals by merely putting a deposit down and having the lender fund the remainder of the project. So in this particular case, as Yair was saying, Lendai will fund up to 70% of the value of the property. The property value needs to be over 100,000, and provided it meets those criteria, and of course is in the states that Lendai is capable of lending in, which is the vast majority, admittedly, you are being able to buy high cash flow rentals with a deposit down, cash flowing from day one, giving you a much nicer cash on cash return on those properties. What that means is that if you've got, as you were saying, if you've got $100,000 or $200,000 to invest, that will allow you to buy 2 or 3 properties possibly, instead of just the one property for cash that you would have bought previously. The second strategy, which is what we call the BRRRR strategy, or the BRRRR strategy. This is one of the most popular strategies within the US for US investors. And what this allows you to do is to buy, renovate, rent, refinance, and then repeat. Meaning it's a little more complex than the buy and hold. It allows you to manufacture equity into the property by doing the renovation. Generally, what that will mean is you'll also get an increased rental return on your investment. You'll be building in some equity on your investment. And the best part of this strategy is it means, you know, and again, just using some numbers, let's say you've spent $100,000 on purchasing the property and renovating the property. If the valuation on that property can come in at about 140, 145, that will allow you to pull around about $90,000 to $95,000 out of that deal. So virtually, that what happens here is you can end up with very little cash left in that deal, have the majority of your funds pulled back out, and you can repeat that process almost ad infinitum. One of the best strategies for building a portfolio quickly, allowing you to generate some equity and to pull as much of that back out as you can, and to continue to repeat that process. We'll have a option at the end here. If anybody wants to have a chat with us, I'm more than happy to have a chat and go through these strategies in detail. So the third one is one of the strategies that I use specifically. And what it enables you to do is, again, we call it the cash generation strategy. It's using a one-time cash investment into your business, where it enables you to flip 2 or 3 properties, to use the profit or the funds from those purchases, from those properties, to then purchase rentals. Now, where lending can come in here, though, is what you can do then is those rentals that you have bought for cash, which you've made that cash, mind you, from flipping a couple of properties, you can then refinance those funds back out of those rentals, so you can then purchase additional rentals. So whereas in a normal cash generation strategy, in 3 years, you might be looking at purchasing 4 to 5 rentals, using funding and using companies such as Lendai to help you with your strategies here. It could mean in those 3 years, you could end up with 7 to 8 properties instead of the 4 to 5 that you would normally have had. So it really allows you to fast track your results and enables you to build a very large portfolio at a quicker time. From our standpoint, you know, really, if any of these are in interest and you're really not really sure where to start or how you even begin, we've got multiple ways that we can help you to implement these strategies. First of all, we have more what we would call our do-it-yourself fix and flip academy. We can teach you everything you need to get started. It's all in one place. Everything that you need is in there. It's just a matter of going through the learning and then applying. On the other hand, we certainly have our done with you experience, where we will have our experienced coaching team guide you through the whole strategy. You'll have us at your side. You'll have Lendai at your back, helping to make sure that you ensure success and get the best results that you can for the properties that you're purchasing. And the third one, which we would call our done for you service, or you may see it around as our platinum advocate service. If you don't have time or you're not really sure how to start, you can leave it to us. We can do the entire process for you. Of course, I can't apply for loans for you. You'd need to do that through Lendai directly. But we can help source the properties. We can help making sure that the properties are the ones that Lendai would be lending on, making sure that we're filling those gaps, ticking those boxes, and getting those properties in. You can get those properties then refinanced, and then you can repeat that process, and away we go. So what I'll also do right now, you may have seen when you registered, we had a handout on opening bank accounts. What I'll do is I'll make that active, so you should be able to download that handout in here. There's a couple of options when you're opening bank accounts. We generally use a couple of fintech companies. There's a company which used to be called TransferWise, which is now called Wise, will allow you to open an online account. There's another company called Mercury that has options to possibly open an account. So you can have a look at these, have a look at that cheat sheet, have a bit of a read through that. That will enable you. You don't actually have to fly to the US now to open the account like you used to do. I must admit, if you are in the US at any stage, I certainly would recommend probably walking into one of the major banks and getting an account opened up for you. It'll take you about 3 to 4 hours probably, and you need to be sitting in a branch. And we can also give you a cheat sheet or a checklist of things that you're going to need when you're walking into that branch. But in the meantime, there is certainly options for doing it from here. The other thing, as I was mentioning, what we can do for you is have a chat with us. So what we do is I can't have sort of everybody. We just don't have the time, and I'm sure Mikhail and don't want to be up at 3 or 4 in the morning too often if they can help it. But we will free up about 20 slots. We can sit down and do a 1-hour strategy session with you. Now, normally the strategy sessions are used exclusively for our clients, but we will open that up for you so we can discuss the strategies. We can have a look at where you're at. We can have a chat. Mikhail can go through where lending can help you, and how to basically best implement that strategy. And then if you need some help implementing that strategy, we can have a chat to you about how that works. The first 10 that book in, what we also have is another free guide, which again we generally use is for our inner circle members only. It's valued at $197. We'll give you that free, and it goes in depth on how to obtain funding in the US. So make sure you have a book. You should see now in the offers tab, there should be just a button. There's no cost. There's certainly no obligation. You can book to have a chat with us. Mikhail and I will sit down with you. We'll run through strategies that'll help. We'll get a bit of an idea on what you're looking for, where you're after, and then we can help design a strategy that can work both from a property investment side and also a lending side. So, hopefully that's been helpful. Don't forget that cheat sheet there. What we'll do now is we'll go into any questions. So if there's any questions, let me just jump in here, see if there's any other questions that have come through. Otherwise now, if you've got any questions, throw them in there now. The other thing is you'll see Mikhail will have put a link in there. If you already do have properties in the US, you can straight away start putting together an application to do your refinance. And it's literally just by clicking on a link. And you can start putting in your details. You don't have to complete the link in one setting. You can save it. You can go through. You can start uploading your documents. You can do whatever you need to do, and you can start filling out that application if you wanted to do that directly. By all means, please do that. There was a question come up. Ari was asking, can this be done in SMSF?
So what is a SMSF? That's
so that would be the retirement funds. Is that what are you guys looking for? Well,
correct.
When you come to put the down payment, we're not we're gonna check the source of funds. We want to see where the funds came from, but if you're deciding to pull out the money from there for the down payment, that's totally doable. Up to you. I'm not sure what does it mean from tax implications if you pull out those funds. I'm not sure. I'm not a tax expert, but the bottom line is that you will be able to use it, and we're just going to check the source of funds.
Yeah, and I see there's
I might even.
Yeah, so just regarding fixed flips. Sorry.
No, that's right. I'll just jump in really quickly and add a little bit to that as well. I personally, we have a self-managed super fund, and I do invest in US property through that self-managed super fund. You certainly can get, you can borrow within your self-managed super fund, Ari. You have to, essentially the plan will be, and I would certainly recommend you discuss this with your accountant and your super fund auditor, make sure your super fund auditor is comfortable with you investing in the US. Some aren't. It is certainly legal to do so in Australia, but some super fund auditors can be quite negative about it. So just make sure that your super fund auditor is quite comfortable. You would have a trust here in Australia, like Yair was saying before. You'd have your super fund would be a trust. You'd have a corporate trustee. That corporate trustee would then own a company in the US. That company would then be purchasing the properties, and then that's the company that would be taking out the loans. So it certainly can be done. There are some tax implications as well, so you will certainly need to have a chat with that as well. Daniel, I see you've asked if, just to confirm, can you borrow money to fix and flip properties? If you scroll back up a bit, Mikhail's put in some answers up there. In essence, to be honest,
but I can address to that. So we're only lending now. The loan program that we have available at the moment is for rental properties, long-term rental properties, which means property that are either in a livable condition. That's what Michal was referring, C1 to C4. If you're purchasing the property, it doesn't have to be leased yet, but it needs to be in a livable condition. Maybe it needs some minor improvements, but it's not a fix and flip. For a refinance loan, the property has to be what they call stabilized, which means it has to be with an occupied tenant in it. And that's the plain simple. We're now working very soon. We're going to launch a new program for short-term rentals, basically properties that are for Airbnb, VRBO properties, which is a huge market in the US, and people are making great dollars on those properties today. And there's a very small amount of financing options, even for Americans, actually, for those type of properties. So we're building a designated program specifically for those types. As far as fix and flip, Lendai, we're not financing fix and flip at the moment. We do have lending partners that specialize in those parts. That won't be through our online portal and with our online system. But of course, if you will come to us and you will ask for help, we won't say, oh, no, it's not on our table, we won't help you. We'll connect you to other US lenders that we vetted, and we know that they know how to work with foreign investors in some capacity. They're not especially just for foreign investors, that they know, and they will try to help. And again, on fix and flip, it's more complex because there's higher risk there, of course, a much higher interest rate. They will look more on your investment experience in the US, because they want to make sure that you know how to handle a US project. So what we see with a lot of our borrowers that are doing, there's two options. One option is go to those partner lenders that we have. You will get a short-term loan from them. Let's say a loan for fix and flip for 12 months. You will buy the property with this loan, renovate it, and then you will come back to us to replace the 8 to 12% interest rate loan for 1 year in a 4 to 5% loan for 30 years. So you start with a hard money loan and get the fix and flip done, prepare the property, put a tenant in it, and then I can give a good example for that. We have borrowers that they bought 2 fourplexes in Jacksonville, Florida. They bought the properties in $200,000, spent $100,000 renovating them. They got almost 100% LTV. They got $290,000 of loan in 10% interest rate for 1 year. Once they finished rebuilding the property, put in 8 tenants in this place, they came to us. The property, we evaluated those property in $600,000. So we gave them almost 350, almost 400 actually in this case, $1,000. So they actually bought properties with other people's money, renovated with other people's money, and then replace the other people's money with our money, which is still other people, in a better rate. And now they own 8 units in Jacksonville for the next 30 years that are very, very positive cash flowing, with almost no cash from home. But they are seasoned investors, and they know how to handle those kinds of projects. But yes, these things are happening all day long with Lendai. Any more questions? Let's see if we have.
So Ravi's also asked, does this affect the Australian credit score? I don't know if you guys know the answer.
We don't do a hard pull on your credit score in your origin country. We will ask you to upload your credit report in your origin country, whether it's Australia, Canada, etc. But we're not reporting to the Australian credit bureaus because we're a US company and we're working in the US. We do want to see that you have a valid credit score and you have a valid financials in your origin country, but this is not affecting the credit score in your origin country. We're not. So that's that side. So I see that Michal answered about the prepayment. So after the first 5 years, we have a 5-year prepayment penalty, which means, or a prepayment options, basically. If you want to prepay in the first 5 years, it will cost you 5% in year 1, 4% year 2, 3% year 3, etc. until the fifth year. And from the 6th year and onwards, there is no prepayment penalty. And that can also be applied if you're buying a portfolio of loans, a portfolio of properties, and we finance, let's say, 10 properties for you guys. And now you got we just had one like this. We had a 3-property portfolio in Georgia in this case. And the borrower just got an amazing offer on one of the properties. So he said, you know what? I really want to take this offer because it really is a crazy offer on this property. So he reached out to us and we did what it called a partial release. He paid off only a portion of the loan. So we keep the loan valid on 2 properties and we allowed him to take out the one property that he wanted to sell because he had a great offer on this property. So he kept the loan, he kept his interest rate, but he had to repay, in this case, I think it was $80,000 to buy out this property outside of the loan, basically. So yes, there's a possibility for doing that.
All right, that's great. Thank you. Yeah, I think that's most of the questions. What we might do is we might actually start wrapping up. We've gone a little bit over time, so I'm conscious of it being nearly 5 a.m. in the morning for you guys. So look, we'd really love to thank you for coming along and spending the time with us tonight. Again, such an early start for you, so I really appreciate that. If anyone else has any questions, you're welcome to send them through. We've got Mikhail and my email address there. You're welcome to shoot us through any emails. We certainly would recommend you grab an hour and let's have a chat. We can go through a whole bunch of the questions there for you. We can put a bit of a strategy together for you that you can go away and utilize that information. And then if you need any help implementing that, we're here for that to help as well. So by all means, don't forget, there will be a recording. What we'll do is we'll send that out to you possibly tomorrow. You'll probably get the recording. You can run back through this. And then again, if you have any questions, you can send through some emails or book one of those slots. If the slots are all full, please send me an email and we'll see what we can do. And make sure that we could possibly get something, find a spot for you. So hope that was great. Thank you again. Yeah, thank you, Mikhail. The information was fantastic. Really appreciate your help. And thank you everyone for coming along. If you're watching this on the recording, there will still be a button you can download your document. And hopefully, depending on how long it takes you to watch the recording, there might be some slots left. But again, send us an email if they're all full, and I'm sure we can try and squeeze you in somewhere. All right, everyone. Thank you again. Have a great night. Have a good morning, guys. And thanks for all your help.
Pleasure being here.
All right.
Cheers. Thanks so much.
Thank you. Bye.